Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets and talking about some of the trade ideas that you could potentially be looking at this week. Let's start off here by looking at the dollar index. You can see it's pulled back a little bit amid some month-end flows, some hotter than expected Eurozone inflation data that we had out of France. Look at this. Above expected, Spain above expected, and the month over month way above expected. So the dollar's holding a little bit below its recent highs, but I'm thinking if the US data that we have coming up later in this week, the ISM reports, namely, are robust enough, like the last batch of ISM reports from last month were, then we could probably hit this resistance area in the upper 105s. So could be a potential nice opportunity to start adding to those longs, just for a short-term target here of these resistance levels. Although, to be honest, I remember I talked about this about a week ago when we were retesting this previous bearish trend channel. That was the area in the 103s where you really wanted to get long. Obviously, with hindsight, that seems to have worked out. Quick look at stocks, because they seem to be at a bit of a crossroads. On the one hand, you've got short-term, well, medium-term support from the low last year that seems to be being broken. You've got the 50-day moving average, which seems to be being tested. The 200-day moving average is holding for now, as with the 100-day moving average just below it. But if all this support gets broken, which we need to watch out for this week, then we could be looking at a move back to the 3,770-60 area. So that's something I'm going to be watching this week, see how markets respond to the data, to Fed speak. And then if that does start to play out, then we can look at, so say we do break lower this week, then we could potentially look at some kind of retracement, add to shorts, and then ride it lower type trade. That's the one I would sort of be looking at here. But yeah, just something I'm monitoring. Of course, this is something important to note from a technical perspective anyway, guys. The 2022 downtrend is offering strong support in tandem with the 200-day moving average. So there is a chance that this little dip to 3,942 that we had a couple of days ago was actually a really good buying opportunity, and we could be in for a grind higher. Although a lot of people are very bearish at the moment, thinking that stocks aren't adequately pricing the risk of an earning recession, and they're not adequately responding to expectations about how much the Fed's going to raise interest rates, all that kind of stuff. But still, often the market consensus gets wrong-footed, and if stocks went higher from here, as looks technically like it could definitely happen, and if we get back to the 4,200, things could play out that way. But anyway, moving quickly on, because actually looking at things here looks like my battery on my laptop's going to die soon. Gold rallying a little bit from earlier lows. I'm still of the view that the dollar is going to keep grinding higher, that yields are going to keep grinding higher as a result of the Fed hawkishness and the still resilient US economy, which I think will continue to be a key theme in the short term, which means I think gold is going to continue moving lower in the short term. So we're actually at quite attractive levels potentially here to add to some shorts and potentially ride this lower, below 1,800 and towards the 200-day moving average here in the 1770s, and this support level as well, around 1770. So that could be quite a nice one. Just to show you yields quickly whilst we mention them. The 2-year is on the verge. Actually, did we test the post-pandemic or 15-year highs or whatever? Yeah, it looks like we did. Nearly above 4.8%. Could go above 5%. If we're talking about Fed interest rates going to 5.5% this year, potentially, then this could go above 5%. Especially if we're talking about Fed interest rates going to 5% and then up to 5.5% and then being held there for some time. There's definitely room for this to go higher. Same with the 10-year. Could push above. It's holding below 4% for now, but could push above it. Could push back towards 4.30 or 4.3%, which was last year's highs. And obviously, this could all pressure the dollar, help the dollar, pressure gold. Finally, quick look at oil. Seems to have formed a bit of a short-term pennant, but I'm still Well, I mean, you know what happens when a pennant breakout occurs. You could get a little pop higher, or you could get a little pop lower. But I still think I'm looking at this range for now, 82 to the upside, sort of 70, 72 to the downside of the support areas. And I'm not really seeing too much in terms of like nice trade opportunities with oil just yet. This will be something that I want to reassess when we get to test one of these key support resistance areas. But yeah, anyway, guys, hope you all enjoyed the video. I hope you all found it informative, and I'll see you all in the next one.